quick update on Euro USD. So yesterday I did a similar post to Euro JPY. I said, okay, we're gonna take long positions in Euro JPY. Then I said I'm gonna explain later. So this is the explanation. So yesterday when I was looking at Euro JPY USD, I was like, okay, we Euro USD has been in this upward trend we've seen in the daily. Structure has still been maintained to the upside. High highs, high lows, high highs, high lows. We come in testing this previous high low. Then we created another high high. Then we see when you pull up a fibs from this low to this high, we're seeing price is respecting the 78.6 Fibonacci retracement. And the other thing, when price was currently trading here before I entered executed the trade, we see all the price action is above the EMAs, which indicate we are in a bullish scenario. And when you break this down to the 4-hour time frame, we see structure has still been maintained. When you pull up a fibs, you see price is respecting this 78.6. Then I was like, okay, structure is still to the upside. So the only thing we need to do is break. We need to see shift of momentum so that we could have a continuation to the upside. So we had this small counter trend line here. I'll draw it to you. This thing. Then I was like, okay, so we're seeing price was creating low high low 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 high low low. Then there was this consolidation after price coming and retesting the 78.6 Fibonacci retracement. And the other thing when I looked at was we had these key liquidity levels like around here. We see price rejecting here here. Then I was like, and every time we see price just dip below this liquidity, it's massively just there's strong momentum to the upside, comes and tests again, goes to the upside, come and test again. We see all these engulfing candles coming around these liquidity levels. Then I was like, I examined that. Then I was like, okay, cool. The only thing we need is either break of structure or we need high momentum to push market to the upside. Then I was like, when you break this down to the 1-hour time frame, so we see this counter trend line was broken. So the other thing, this was not like counter trend line was broken. This is more of like market cycle. So we're seeing there was a transition from this big downward trend. There was this downward trend, right? We see massive sell-offs, then we had this consolidation. So there's normally like whenever we're in a downward trend, there's a accumulation phase before another bull run, right? So downward trend, consolidation, uh move to the upside. So that's one other thing I noticed. So we pointed out these liquidity levels, this area of liquidity. Now it's like worst case scenario, we could see even price dip below this one to collect more liquidity. So the only thing which you need was confirmation to break out of this consolidation. So you see price dip the first time after the support here, after the support. Then yesterday, when you look around here, I'll use another color. Let me change to red. So you see in lower time frame we see, okay, there's this structure here which was broken with high momentum. You see when the price dipped to below the liquidity level, it collected some liquidity. We had the engulfing kind of move, pushed the upside. We see price came and tested the broken resistance or support. So we see at this strong liquidity level, price acted and went to the upside. Then I was like, good. And also price at that time when I was posting, we see a good pin bar testing this area of support. Then I was like, this is wonderful. We could see another green candle to engulf these previous weeks here and to the move to the upside. And luckily, yesterday I was not paying close attention to the fundamentals, but most of my trade setups are not based on fundamentals. So I'm like, okay, so we see before the news release, we see um uh, the Feds came with another monetary policy. Then we see this huge spike to our target, which I was talking about. So why this target one? So when you look at the 4-hour time frame, we had this liquidity, another liquidity level which I talked about. So we see spike here, spike here, spike here. Price rejected once, two, three, four, and here acted as support 1, 2. Also rejected here and here. So I was like, definitely price is going to be attracted at this liquidity level before either fake outs or breaking this. We need to break out of this liquidity level for continuation to the upside. So I kept like my two estimate targets so that you could back. And normally, like when I put this kind of targets, and let's say you're risking 3% of your account balance, so then you split your lot size into two. Then one trade setup is based on this target, another trade setup is based on this target, so that when you hit one target, even if the other one got faked out, like this one here. So we had news released, we had targets being, when you break this down to 30 minutes, we see this huge move to the upside, hitting our first target. Then we see this uh, fake out. So we see price came and collected more liquidity. Then we see this big continuation to the upside. So what am I expecting? The first thing, we hit our first target. Then we had this. So our first target was acquired, but our second target was not acquired because we had this fake out. The other trade was hitting stop loss, but our first target was achieved. So right now we see what do we see when you pull up this consolidation phase to this side. We are seeing, okay, we have already broke out of this consolidation phase, and we see this huge fake out. So what am I expecting? Retest, break this liquidity level, and hit our second target. That's it. No matter our stop loss was triggered for the second for this second target. But what I'm seeing, I think the market could do is either consolidate for a while before moving to the upside. So this was a very wonderful trade. I hope you guys back some money. Thank you.